All right.
All right. Welcome, everybody. Happy Tuesday. Happy Tuesday. Tonight, we got a special guest we'll be sharing. I know a lot of you folks are worried about current events. Um, and Investing is one of the heart and souls of this. Welcome, everybody. Happy Tuesday. Happy Tuesday. Investing is one of the hearts and souls of what we do here. So, we got a special guest today. We'll be talking, but first and foremost, Ray Glimp from Homeless to Over 100 Doors, 10 plus million in real estate assets. And each and every Tuesday, we come here to give you folks here, YouTube, Facebook, wherever you may be watching, share information with you to our knowledge. So happy to be here.
Absolutely. My name is Seth Timmerman. I've been investing in real estate since 2019 or so. I actively fix and flip and buy small to medium multifamily here in the Morgantown market. I also run a full-scale wholesaling operation out of the state of Virginia. And I've done well over 200 transactions in my time in real estate.
Awesome.
Still love coming every single week and giving value, as much value as possible.
Great. Okay.
Make sure all the attorneys are happy. The views and opinions expressed in this podcast are those of the host and guests and do not necessarily reflect the official policy or position of any organization. Content provided is for informational purposes only and should not be taken as professional, legal, medical, or financial advice. Listeners are encouraged to conduct their own research and consult with appropriate professionals before making any decisions based on information provided in this podcast. Any reliance you place on such information is strictly at your own risk.
Awesome. Gold Digger section. This is where you guys can chime in if you have any wins last week or anything you want to chime in about. If anybody on YouTube watching, put it in the chat for us. Um, Anybody have any goals they want to share? Seth, you have any goals that you wanted to set?
I will say that I have jumped back into the acquisition seat in my wholesale company a little bit more over the last week or two. So yesterday I made over 90 calls and texts and different things like that. I hit close to 100 again today, sending out offers every single day, making things happen. And so it's a good time for me to be doing it too. With the AI that I talked about that we integrated into the business, I'm able to see firsthand what my acquisitions guys are seeing with AI. So it's a necessary evil right now, but it's fun. It gets that competitive juices back flowing for me, back in the grind of things.
Awesome. And goal for me this quarter, I want to make sure I want to do one acquisition of a long-term buy and hold and try to do at least three fix and flip this quarter. That's kind of my goal. I'll let you guys hold me accountable if you're watching, so you can all chime in. Anybody else, if you again leave comments in the YouTube, anybody here going once, going twice, sold. All right, let's
Breaking
hit some
news out of the
breaking
White House
news.
now with a new cabinet resignation. The Secretary of Labor, according to multiple sources, and I believe now confirmed by the Trump administration, stepping down. She'd been facing an investigation for potential misconduct. Monica Alba is at the White House now. Mon, what do we know about the Labor Secretary?
Yeah, so Hallie, this is a situation in which for weeks there had been an indication that the probe into the labor secretary's conduct was growing. This is something that started months ago, and it was looking into the use of potential misconduct when it came to things like personal travel potentially on the taxpayer's dime that didn't just involve the labor secretary herself, but also some staffers. So there was an ongoing inspector general investigation and inquiry into this that
Yeah, if you can
resulted
pause it, I don't know if you
in
can pause it from
several
there.
of the
We don't need that.
Breaking news out of the White House
I don't
now.
know if you can. All right. Pretty much for breaking news, we this was one of the biggest things we talked about are the labor reports. Um, Kind of correlated. We know the market's pretty bad. You can see on the left-hand side foreclosure rates by state. Foreclosures are up year over year, 28%. Right. So when we think about what's happening in the world, there's a time to see it as opportunity, right? So a lot of us is looking at this as opportunity, especially if you're a real estate investor. This is a great opportunity. In every recession, there is a great opportunity. May be a good opportunity to buy, acquire assets, etc. So, yes, this might be a little scary for some, but you folks here listening and tuned in understand that this is our opportunity to buy, because this is when the real money is made in a recession. Okay, so anything else you want to add to that, Seth? Before?
Yeah, not a lot of surprises when it comes to that map and stuff like that with the areas and things like that. We just had a lead come in that was somebody that lived in Virginia but was facing foreclosure in the state of Florida, right? And kind of going through that. Said that payments were going up in insurance costs, right? Changed the mortgage rate or the mortgage payment and things like that, and really changed kind of what was going on. They had other factors involved with it too, but the stuff we talk about every single week, like had an actual conversation with somebody that's going through exactly what we've been talking about. So it's out there, guys,
It's happening.
and they need help.
All right. Well, for those who don't need help, we want to bring on somebody who's a specialist. I'll give you a brief intro. I've known Neil for several years, over I think like a decade now. I think we're over a decade. Great friend, mentor, right? I consider Neil a mentor, and somebody whose opinion I value highly. Um, Full disclosure, I've invested with Neil, so I want to make sure I make that privy to everybody too, with the ventures that he does have. A lot of us have wondered how to get into these types of investments, some almost like I wouldn't call it angel investments. I won't speak too much, but the pre-IPO companies like SpaceX and all these companies that you hear about, how do we get into them from the ground level? And Neil's an expert. He's kind of told me about this some years ago, and I wish I listened sooner. And I'm happy I listened now. So without further ado, Neil, thank you for being here this Tuesday.
Well, I appreciate the platform, the opportunity. Obviously, I've had the pleasure of knowing you for many, many years, and Seth in recent times, and what you all are doing on this roundtable every week. I think that's a tremendous value add for folks that are, trying to understand the market signals and trying to connect that to how they should think about where they deploy their capital. I think it's a really good work, and yeah, happy to be part of it. And we can talk about some private market investing today. If it's okay, I can grab the screen. Let me do that.
I'd open for you, sir.
Yep. Are you able to?
Yes, sir.
Go.
We can see it.
All right, perfect. So I put together a couple of pages for us to flip through. Let me start with something that most people don't realize. About 90% of the companies in the world today are private, but most of us only invest in the 10% that are public. So right away, we are only playing in a very small part of the field. So if you translate that into real estate, it's like only being allowed to buy properties after the neighborhood is fully built, fully priced, and everyone already knows that it's a great area, a great neighborhood. So today I want to talk, kind of walk you all through what exists before that point, how private markets work, where value actually gets created, and how do you get access to this space, and how the access to this this particular space has already started to open up for the rest of us. So that's the plan for today. Okay. There are sort of two worlds of investing. You have your public markets, which are stocks, ETFs, bonds, which are easy to access, easy to trade, very efficient. And that's great, right? But it also means most of the information is already priced in, right? And then you have the private markets, which is less liquid, harder to access, less transparent. But that's exactly where the opportunity comes from. You're getting paid for being early, being patient, and having access. Another way to think about it, public markets are where companies are already proven. Private markets are where they're still growing into that. Maybe in a lighter tone or lighter point is public is like buying off Zillow. Private is getting the deal before it gets listed, right? That's the way I would explain it. Okay, I thought that would make sense with the folks on this call.
That's
All
perfect.
right.
You got it.
Great. a quick reminder, by the time Amazon went public, people, the value was already gone, so, you know, that's exactly what you all are doing in the real estate market as well, right? So I tried to simplify this as much as as I could. If you look at how a company grows, it's pretty straightforward. They start small, they raise money, early money, and they figure out what is working, and then they scale, and then eventually they go public in that order, right? So most people only invest at the last stage. That's where most of the retail investors get it. But by then, the business is already proven, right? The story is widely known, and the valuation of that company reflects that, So returns are not as much because it's widely known, and it's already been proven out over time. If you think about, like, an example would be, if you think about companies like Uber, Airbnb, Facebook, a huge portion of the value was created even before they hit the public markets. It's like, again, buying property in a neighborhood after it's already taken off, right? So where we focus is right before that. Companies that are already working, already scaling, but still private. These are the companies that are wondering, should I go public? Or should I start a process to get acquired? Because they're now at that cusp where they have to make a decision. But there's still value to extract because they haven't gone public yet. So you're not taking like early stage risk like Neil, Seth, and Ray started a company in their garage. You're not buying into that kind of company. You're buying into a company that's already scaled, real world revenue, top line, real world profit and loss, balance sheets, but just wondering, should they go public or not? So you're still early enough to benefit from the growth that's ahead of you, if that makes sense. Okay. I figured that, this is why I like speaking to real estate investors, because you already think this way. Let me just say, how many of you try to buy before an area fully develops? Ray? Seth?
I think everybody here tries to buy before we develop because we know that's where the value is, I think.
Absolutely. Where's the next development at? Let me buy everything up right now. Right?
Exactly. Yeah, exactly. So same thing. You're already doing this. You're thinking about location, timing, cash flow, exit value. You're doing all those 4 things. Private markets are the same idea. Instead of location, you're evaluating market size and competition. Instead of rent, what you could rent it out, or what what the person that's going to buy, what they're going to pay for it. You're looking at revenue growth. Instead of the comps, you're looking at valuation and deal structure. So just like real estate, the best deals don't show up publicly. They come to the right network. So when I was like, when Ray asked me, if this makes sense for me, I was like, I would love to come to you, talk to you guys, because you are the type of investors that are already doing this and already connect to the theory of it. Okay. Oops. So here is now the natural question is, if this is so attractive, why doesn't everyone do it? That's the natural question, right? So historically, what's been the problem is your access to it. Access has been the barrier. You either had to commit to a large amount of cash into these large privately owned, privately held private equity companies or venture capital companies, and you have no control. Like, you give them a sum of money, they take it, they deploy it over time, and they can take your money and spend it 5 different ways. Okay. So you either had to do that, or you need to be directly plugged into some insider networks. Like, somebody that's works for their company, something like that. That has kind of changed with what we call it SPVs. Okay. At its core, an SPV is very simple. It's just a single purpose entity for one investment. So instead of taking your money and investing in 5 different ways, you know exactly where your money is going. You invest into it, you invest into an SPV, it buys the shares in a company, and you own your portion. I thought of an analogy of what this could mean from a real estate perspective. And here's what I thought. I said, it's like a real estate syndication, like you're doing a real estate syndicate, but for one property. So, except in this case, you're not, you're instead of a building or a property, it's a company, but it's the exact same thing. Okay, it's a syndicate. You guys with me so far?
Yeah, you hit the nail on the head. Yeah, that's exactly what I was thinking.
Perfect analogy.
All right, perfect. So now, just like how does it work, right? Here's how it works in practice. A group of investors, let's say us on the call, we come into one SPV. That SPV buys the shares in the company. Me, Neil, I act as the general partner. What I do is I find the shares, I go source the shares, I do the diligence to make sure this is the right company to invest in. End to end, why this is the right company, why should you do it? I help us structure the deal, negotiate the shares, and then I manage the process end to end. But most importantly, I invest alongside you in every single SPV that we do. Okay, so that we're aligned, and when it works, we all win. That's essentially, the best way to explain what an SPV looks like.
Hey, no, we got a question too. You want to take questions now, or you want to say?
Yeah, absolutely. Let's do it.
Is this for accredited investors, or can anyone participate?
This is for accredited investors. The definition of an accredited investor is obviously you have to have a certain amount of capital that you generate. However, when you come into an SPV where I am the general partner, or Grain Ventures, our company is the general partner, we qualify you. We qualify you to understand, are you an accredited investor or not, and whether you can participate in an SPV or not. You're not, if you want to go buy shares from the secondary market or from the company representative, you have to be an accredited investor. Good news is I am an accredited investor and I help raise the SPVs. So I qualify people that joins our syndicate. So it works out very well. Great question.
So you're using basically someone who's not an accredited investor is using you as their ticket, right? Their license or their accreditation.
Yeah, essentially their vehicle. Correct.
Right. You make the vehicle accredited.
I make the vehicle. That's correct. So that's how. So this is just a flow, a diagram to kind of show you how that works. A limited partner or LP is investors that come into the SPV. It could be, I could also be an LP in the SPV. It's Ray, you, Seth, me, others on the call. We're all LPs. We come in together. We form the LLC. That that LLC is the SPV that owns the shares in the company. And the general partner, myself, I have these responsibilities to make sure that we are getting the best deal. We're diligencing the right company. We're not just investing in any company. We're investing in the right company that has all the right headwinds and has the right growth structure, growth profile, and then managing the entire process end to end. Okay. All right. I want to talk about what does it look like from a transaction journey or the deal mechanics. Okay. So one of the questions I always get is like, most of these investments come through secondary transactions. So you're buying shares from early employees, early investors, or venture capital funds that were early investors in the company when it was a 2-people company or 3-people company. And that's who have the most amount of shares they're holding. And they have so much shares that they're willing to part with some of it, get liquid, because they can then take their liquid cash and make some other investments, because as the company grows, they're making money, right? So they're willing to part with it. So we are buying from early employees or early investors or funds that are rebalancing their positions. Think of it someone who bought a property early and now wants to take some money off the table, but not sell the whole thing. Essentially, that's the way to think about it. Next is pricing. Pricing comes down to a couple of different factors. The company's last valuation. So as I was explaining before, it starts early, then it goes to several rounds of funding. Okay. So when it comes down to pricing the shares of the company, you look at the last round that they raised capital to see how they were valued, right? You look at the supply and demand for shares. That's always the same for stock market as well. And how the deal is structured. Sometimes you go direct, like let's say Seth's an employee in SpaceX, right? And SpaceX is about to go public. And I talked to Seth, and Seth says, sure, Neil, I will give you X amount of shares that you can buy off me. That's direct. That's one layer. Sometimes when you don't find a direct and you have to go through a couple of layers, it could be like two different layers where Seth has sold his shares to a fund, and that fund is now letting us buy some shares from them. You still have ownership. It's just two layers in between you. So how the deal is structured is also important. If you can go direct, you can sometimes negotiate a better rate. If you can't go direct, you have to go to somebody. As you all know, the price increases. That's about it. But the pricing piece, this is where discipline really matters, because just because a company is great, doesn't mean it's a great investment at any price. So you have to do the right diligence for it. Okay. I know taxes is always on everybody's mind. So I want to spend a couple minutes on taxes, because I know that matters, right? So this is a pass-through structure, similar to all the real estate deals you guys do, right? You get a K1. Typically, there is no tax impact during the holding period. There's zero impact because there is no activity. But then the taxes are triggered at a liquidity event. And the liquidity event could be an IPO when they go public, or if someone comes and buys out the company entirely, then you get liquidated. When that happens, you obviously get a K1 that signals it. You use it to file your taxes. But operationally, everything is handled through SEC compliant administrators that handle your banking, handle your paperwork, the legal counsels that all manages it entirely. I don't do any of that. We hire third-party SPV administrators that are Regulation D compliant, that help us with these private placements, so that they are meeting the 503C and 503B regulations as per the SEC. We don't have to worry about these jargons, but just to say there's a compliant way of running everything through, and the SPV administrators help us do that. Okay.
They're your who, not how, right?
Yeah,
don't worry
exactly.
about how to do it. Just find somebody who knows how to do it.
Yep. And these are the folks that get audited all the time. They have to adhere to a standard regulatory framework, and they manage that for a fee. Just so you say, you get the right expertise for a fee. Okay, taxes done. Now, I always come to this as like, how do you think about all of this, right? So if you zoom out, right, this is really about how you think about investing. Number one, first, you focus on the themes. Okay, what are some of the themes of your investment? For Grain Ventures, for what we do, our themes are AI, obviously, everybody is on AI. Energy, and when I say energy, this is very important. There's only so much energy in the world that we cannot keep up with all this growth that is happening in AI. People are investing in solar, nuclear, green energy, wind energy for that reason. So we focus on energy as well. Defense is another one. The Ukraine conflict with Russia made a very fine point on how wars are being fought. Ukraine had these small, tiny, autonomous boats that nobody was driving it but a computer that was taking out entire Russian fleets. Okay. So warfare has changed, so has defense. I'm sure some of you have heard about companies named Anduril and others. That's completely how warfare is kind of progressing. So we are interested in defense. These are some, long-term things that we are invested in. These are not short-term trades, right? So these are the long-term shifts, that themes that we are interested in. So that's number one. Number two, be patient. Okay. You are underwriting an event, a liquidity event that could be anywhere from 2 years to 5 years. Sometimes it could be 7 years, but you're underwriting a thesis that takes time. So you're not going to be able to go and see the price movement that you go on your stock exchange and see how your stock is doing. You're not going to be able to do that, because think of it as your own company, right? You're invested in your company. Your work you put in is compounds over time. Same thing here. You're investing in a company, one company, that you're invested in their growth, and you made the investment because you know that it's going to be a good investment in the long run. The long run can be 2 years, 3 years, 5 years, up to 7 years, right? Okay. Number three, access really matters. The deal you get into matters more than anything else. The access has always been tough for private markets, and that's why it's so important to have the right sort of structure, diligence, as well as the access that you need to get into these things. And then number four, this is about adding to what you're already doing. You guys are savvy real estate investors. You've been doing this for a long time. Real estate plus private markets gives you exposure to a different type of upside. You're investing in another asset class outside of your real estate assets, right? So it's complementary to what you are doing. That's why, as I was saying earlier, right? It's a group that I enjoy talking to because you guys get it. Okay. Any thoughts, questions there?
No, I think you're spot on, Neil. And as investors, we know it's an investment. Nothing comes overnight. The hardest part, I will say, is not being able to see that little ticker. I'm a fiend for that ticker. I watch it, but just knowing that your money is sitting, your money is invested. One of the coolest things being invested in stuff like this is actually seeing it on the news and seeing the news break about these little stories about something you're a part of, and that is one of the beauties of being invested in it.
Yeah.
I'm starting small. I've started a couple of small companies and things of that nature, and so I understand like the glass ceilings and the growth kind of hurdles and stuff like that they see and stuff like that. So it's not linear with a lot of these growth items too, right? Even at the point where you're looking at getting into these companies and stuff like that, like they still have some pretty serious barriers, right? And so it takes time to put those systems and processes in place.
Sure. Yeah. You know, if you have a good GP, general partner, his or her job is to keep you informed of how your investment is doing on a quarterly basis. You are not going to be able to go find it in a brokerage or in a ticker, but if they are doing their job properly, they should be keeping you posted. Hey, you entered at this valuation based on the last 6 months of what is going on in the market, or another fund or another fundraising event that happened for this company. Your X dollars is now Y dollars. So they should be able to take you on that journey. And if they're not doing that, then they should be doing that. Okay. All right. I don't want to drill this too much, but what we have built with Green Ventures is intentionally very simple. We focus on bringing a very small number of high conviction, late stage private companies, but one deal at a time. We have no blind commitments. You're not going to just give me your money and make me figure out where to put it. There's no blind commitments like that. There's no pressure to deploy capital. I mean, I'm sure Ray can speak to this. He probably gets emails from me like, "Hey, we're doing this," and all I want from investors is taking a look at that and say, "No, this is not for me. I'm good." Actually, we kind of encourage that because there's no pressure to deploy capital. You personally evaluate each deal on its own and decide if it fits your goals or not. Okay, so it's no blind investment. You are fully given the reins of where you put your money, how you spend it. If you like the thesis, if you like the analysis behind it, then you ask questions, you learn more about it, and then if you decide, you make the investment. That's about it.
I think, well, since we got other people listening too, I think that's one of the most important things about this is an educational space too, right? We talk a lot about real estate, we talk about politics, we talk about a lot of stuff here, not just one round. And the continued education is one thing I'm happy to be a part of Grain Ventures with, is that, I know you do send out these letters. There's some stuff I get and I'm like, I didn't even know this thing existed. I didn't even know this was a thing. There was one, I don't know if can I talk about the nuclear power thing? Is that okay? It's public, I guess.
Yeah.
But there was
Yeah.
some type of nuclear power thing. And I was like, man, I didn't know this thing existed, but this would be great to be a part of it. And then there's some of the co-owners were one of them was, or investors was Bill Gates, and the other investor was Sam Altman or something like that. And being a part of something that these guys are a part of is amazing to be a part of. But I look at it in a way of like, even if I'm not a part of it, I've learned about it, right? And so I can share it with people in my association, people that I'm friends with, people in the communities, to know like, hey, look, this is coming, right? And here's the opportunity to have access. I don't get on everything, but I want to make sure, and this is why I'm happy to have you here, Neil, is because I want to make sure my community has access to this stuff too, right? So you
Yep.
folks that are listening now, whether it be here, YouTube, listen further on later down, if you see it on Instagram, I want y'all to have access to this platform as well, because it's great to have it. This is something that people ask for, right? If you can get into Facebook before it was Facebook, you would get into Facebook, right? So having those access to these and before you, I didn't know there was a way to get it, right? It just came out, and you see on CNBC somebody ringing a bell and saying, "Oh, this stock is launched now," right? And usually, I don't know, but it's always I watch it, and then for after a year, it just like trickles down, right? I'm like, man, the people at the front, they probably all exited. I just want to be one of those people at the front, right? And this is an opportunity to be a person at the front. Is how I look at it.
Very
It's
well said.
very similar. Like I think of it as being very similar to every single week we come with breaking news, right? Like it's not just real estate that makes our decisions in our investment careers, right? So uh some type of relationship with something like this, right? You get to see more of that, what's happening in the market, and it decides not necessarily what you specifically invest in, but just it gives you that that broader picture, right? And I mean, so many of the people that are in this room right now are here almost every single week, right?
Yep.
Like you're not investing any dollars to be here every week, but you are investing an hour of your time every single week for education,
Correct.
right? Education is important to every single person in this room. And the knowledge that you gain by just, this is what Altman is looking at, or this is what Gates is looking at, like stuff like that, or this is what is coming up, and these are the projections for this company and stuff like that, like innovative stuff, especially if you start getting into AI and energy, two of the biggest, hottest topics right now in the world, right? Like, I mean, hearing about that stuff before CNBC tells you about it,
Mm.
it's a game changer.
And I just want to add, having access to it from a way of investment
Yeah.
further down the line, and they can relate to real estate. They can relate to business, knowing that, okay, they might be building XYZ here, or they're looking to invest this company. This company is looking to grow here, you know, access to that type of information, and people pay a lot of money for that. So,
Yep. Information.
I do
Correct.
appreciate you being on. I'm sorry to cut you off, but I felt
No,
like I
no,
had.
this is good dialogue because, like, it comes from a perspective that is learned, right? So that takes time. So no, this is very good. Look, I would just say like what the other piece that it's what you will see on this page is like to me alignment is very important. I personally invest in every single thing we do because the way it started was like me, my friends, my family, right? And then it was like, okay, so there is something here to expand to your network, people that want to rethink of where they put their money. There might be an opportunity to make a business out of it. So it started in a very innocent way. So I'm not just bringing opportunities, I'm making the same decision with my own capital. If it works, we all win, right? So it's the risk is shared, and if it doesn't, I feel the same way you do. So it's very crucial for me. It's very important to me. So anyway, good dialogue. Don't want to spend a lot of time on this. I added this page just to give you a sense of where this perspective that I'm sharing with you is coming from. I have spent most of my career in M&A, mergers and acquisitions, where the job is essentially to evaluate businesses and decide whether you spend money or not. And I'm doing this for large corporations, like Fortune 10, Fortune 30 corporations. So over time, when you keep doing those things, over time, you start to build a pattern recognition around a few key things. What does real growth look like versus hype? Number one. Number two, what scalable business models look like, right? And number three, where does risks tend to hide beneath the surface that you're not able to see? So these three things I have learned the hard way, but I've done it for large corporations where I have benefited by learning, but I have maybe personally benefited in stocks that I've received from these companies, but I wanted to bring that sort of conviction and learning to something that I want to do for myself and my friends, my family. So in that role, I have looked at hundreds of companies across different industries, some great, some not so great. And you start to see the difference very quickly. Things like, are margins improving as they scale? Does the business get stronger with size, or does it get weaker with size? Is the growth real, or is it being like propped up? Like you get to learn about all these things, and I think that's the biggest thing that I personally bring into this company is access is great. We get the access; it's very important. That comes through my connections, but the judgment is what I feel like my true value is. Because in private markets, you don't just have a ticker or daily price to guide you, right? You have to make decisions based on fundamentals, structure, and long-term thinking. Also, putting your trust or faith in someone that has good judgment, which is in this case me, right? So Gren Ventures is really just an extension of that, taking that institutional large company mindset of how they underwrite investments, but making it accessible in a more focused way. I feel like that's where I bring value. Okay, just wanted to give you a quick snapshot of some of the examples of investments that we have participated in.
I got to keep this open. I got to take a picture of this just so people not here, they gonna know.
Thanks. The point here isn't just the names, right? It's the type of opportunities we focus in. Generally, these are companies that are already operating at scale. They are in markets that have really strong tailwinds, and they are positioned to either go public or reach a meaningful liquidity event very soon, right? That's why they're late stage. But more importantly, I think it reflects how we think about investing in the private markets. We're not trying to be everywhere. We're not trying to chase every deal that comes across, because more deal doesn't equal to more outcomes, right? So in fact, it's quite the opposite. What tends to matter is the right opportunities, the right time, and the right structure, just like how you guys do real estate, right? So the way I think about it is you don't need 10 winners in this space. If you get one or two really strong outcomes and a few solid performers, and you avoid major mistakes, that alone will drive very meaningful returns for you. I'm sure I'm saying things that you guys think about every single day, right? With all your properties. So it's the same thing. Anyway, so again, it's not swinging at everything. It's about being selective.
I think Ray says it all the time, right? You make the money when you buy, right? And we talk about underwriting, when we talk about having a formula, when we talk about underwriting with maybe even a little bit more risk than what is actually there, and having contingencies and stuff like that. And Neil is saying that, like 15 years of experience underwriting those things and seeing all those red flags and stuff like that. The same stuff that we talk about in real estate every single week about the red flags. Like, he's got 15 years of experience seeing it on the corporate side.
Yeah. Painful experiences, but good experience.
I'm sure.
Yeah. All right. I'll finish with this. I'll leave you all with this. It's not that private markets are, the best thing after sliced bread. Nothing really is, right? The real difference is like when you get in and whether you have access, and can you, are you reading the right analysis that, is putting the right judgment on it. The companies that are shaping the next decade that we will be living through, our kids will be living through, those are being built right now, as you are seeing, while they're all still private. Most people will only see them later. The question is, do you have a way to participate early? I ask myself that question all the time when something comes and hits my inbox. So anyway, happy to talk after. No pressure, just conversations. Happy to take any questions, comments, thoughts, feedback. But appreciate the time today.
Yeah, I appreciate you stepping in, Neil. I put his information in chat for everybody as well. It's on the screen, but I also put a link to the website. I always think about it like, man, why didn't my parents invest in Apple when they had the chance, man? Right? Like, you knew it was coming. We all knew about the iPhone. Why didn't you throw a couple dollars in Apple? And so the opportunities, they don't come much around for these groundbreaking companies, but stuff like OpenAI, with ChatGPT and what's coming, it's just amazing to know that it's coming and be a part of it. So I appreciate it. I appreciate the information you provide. Hopefully, you folks got some value out of that, whether you're listening here, YouTube, etc. And then if you need anything else, you have Neil's information. I did put it in the chat, so you guys have it on YouTube. You guys should see it. And Neil, thank you again. Inner Circle guys, if you guys have any questions for Neil, you can DM me, and then I'll shoot it to him and get you a response. Neil, thank you again. I appreciate your time.
No, thank you. Thank you guys. It's always good to talk to folks that have learned lessons the hard way and they connect to what's happening. Yeah, thank you.
What's the next company? Can you tell us the next company? I don't know if you can disclose that.
No, I get it. So right now we are in the middle of closing our second investment in Kalshi. I am very bullish on it because it's the only regulated company in the US. Like, they went to the Supreme Court for the federal government and got the license from the federal government to be a betting platform.
Wow.
That is a what do you call it? A moat that is very hard to penetrate. Okay.
Wow.
Like, for example, their nearest competitor is Polymarket. Polymarket operates in the US, but they don't have the license to. They can get shut down any moment. So they don't have the license. And the reason I'm bullish on it is because it's turning into a new asset class. Like, how crypto was not an asset class before it became one? Betting on an outcome, like, hey, is Trump gonna say happy or sad on a press conference, or is Ray gonna eat eggs for dinner tonight? You can bet on these things and get paid out on it, and that's becoming a true asset class. So I'm pretty bullish on that. This will be our second time doing it, and yeah, that's what we're working on.
That's pretty cool.
Yeah, I think if you look at sports and sports betting, you got guys like Pete Rose and like sports and betting were so polar opposites for years and years and years and years because everything was going on. Pete Rose, obviously, for other reasons, but like now you can't watch an NFL football game or an NBA basketball game and not be talking about sports betting in some way, shape, or form because
I can't watch anything without seeing a commercial about sports betting.
Yeah, absolutely, because it's more and more legal across more and more states and things like that. And it's a revenue stream, and it's pushed down further. It's a huge industry too.
Question, real quick too. What about on Canadians? Or is this something Canadians can get in as well? Okay, I just want to ask. We got people from
I have folks from all over Ireland, Canada. I have a recent investor from Japan, one of our ex basketball players who is currently playing in Japan.
Good.
But yeah, it's from all over.
Okay, just want to make sure I answered that too, because we do have quite a few people from Canada tuned in here and then YouTube as well. So wanted to make sure I represented for them. All right, now I appreciate it. Thank you again. I appreciate your time.
Thank you.
Yes, sir. Seth, you want to send us off with a quote? We got anything tomorrow? Inner Circle, 12 p.m. Eastern Standard Time. We'll see you guys then.
We got our meetup in Morgantown, West Virginia on Thursday at 6:30. And Scores over in Westover. If you're local, come and check it out. Next week, talking about preventing and fighting where you get property management chargebacks where tenants are charging back their landlords after they move out. It's becoming more and more of an issue as affordability goes down and down and down. So we're going to talk about that next week.
Awesome.
Confusion kills deals. Clarity is what converts.
Good deal. Good deal. Hopefully you guys got some value out of that. I'll tell you. We'll stop the recording and let me stop the live stream.